Hello, this is Books of the Stock Market. How's everyone doing? As for me, I'm doing pretty well. It is much warmer now and most of the snow is gone. It is currently -3 degrees Celsius or 27 degrees Fahrenheit, which is much better than last week. Other than that, I bought a new camera, so my running clips at the end of the video will look much better when my camera decides to come. With that out of the way, let's get into this week's video. In this video, we'll be going over what happened last week in the crypto markets. I was showing off my gains in the previous video, but immediately after the video was posted, the markets corrected. Once I go over what caused the market correction, I'll explain what I did during the correction. I'll then end the video with what I think will happen to crypto in the near future. Also, remember to like, subscribe, and press the notification bell for me as it really helps the channel. So I published my video about Bitcoin netting me 200% in unrealized gains on February 24th, and I was feeling pretty good about myself. The previous videos I made was using a book as the basis of the video, but this video was something I made entirely on my own, so I was feeling pretty good about this. However, the next day, we decided to gap down, and I was down to only being up 140% in unrealized gains for Ethereum. On the 25th of February, we fell 6%. At that point, I didn't really think much of it as these drops happen fairly often and it was only a matter of time before we would be back up to normal. However, we just continued to drop. The following 3 days, we saw an 11% correction. At this point, starting from the high that was made on February 21st, we went from $58,000 Bitcoin to $43,000 Bitcoin on February 28th. That's a 26% decrease in price. However, I knew that this drop could easily continue as the last correction lasted from January 8th to January 27th, which is 18 days. During those 18 days, we saw Bitcoin correct around 30%, so technically if history repeats itself, we still have another 4% to fall. However, this time history didn't repeat itself, but instead decided to rhyme as Bitcoin only corrected 26% so far. At the low of the correction, I think I was down at least 30%. So what caused this correction? Before we get into the factors that caused this correction, I have to rant about something. Some people were saying that Bitcoin going straight up without any correction was not healthy and a correction was soon to come. I have some problems with these predictions. First, anyone can say that. Like everyone knows that if there's a huge move upwards, then a correction will soon happen. At that point, they're not contributing anything and are filling up everyone's newsfeed. And we all know that after they put out the same predictions week after week, they will eventually be right and they start saying that they predicted the correction, which is entirely false. Second, if we look at the previous move upwards, we saw Bitcoin rise 136%, so there's still more room to go as long as there wasn't a black swan event. However, a worrying trend developed that would eventually halt Bitcoin's upward momentum. The worrying trend that developed throughout the week of February 22nd were rising yields. So why are rising yields bad for the financial markets? Rising bond yields are bad for the markets because it means that bonds, which are guaranteed payouts from the US government, are becoming more profitable. This means that people will eventually be taking their money out of the stock market, which is way riskier than bonds, and putting it into bonds as they provide guaranteed profits. So basically, it is a balancing act between the two, and last week we saw yields rise a lot. Therefore, during that week, we saw tech growth stocks, which are considered more risky, have a 7% and a 5.5% correction as many investors were going risk off. If the equity markets were affected this badly, then the crypto markets would look 10 times worse as crypto is considered way riskier. And that's what we saw, a 30% drop in Bitcoin and other altcoins. As you see in this graph, we saw that bonds rose 223.64% ever since August 6th. Therefore, if you watch my Sunday report videos, you see Powell constantly say that he's not worried about rising yields. However, I knew that this move upwards would eventually taper out because we had a very strong horizontal trendline coming up. This horizontal trendline has existed ever since July 26, 2012. I was pretty sure that this trendline, which is a resistance level, would hold because it has been in play for over 9 years. So I knew that this 30% drop was a correction and not some sort of anomaly where the Bitcoin bull cycle ended a couple months early. So you're probably wondering what I could have done to sell at the top and buy at the bottom to avoid the loss caused by the drop. Let's see if some technical indicators could have warned us. The first one that I always use for the stock market is the RSI, so let's try and apply that to the crypto markets. We saw the RSI at 80.06 when Bitcoin hit its high on February 21st. 80 is considered to be overbought and therefore a sell signal when talking about the stock market, but for crypto, 80 really isn't a worrisome number. If you want to know more about the RSI, click the top right corner of your screen as I created a video about this topic. Anyways, why is 80 not a worrisome number? Well, in the last move upwards, we saw the RSI in the overbought territory for around 18 days. This time it only lasted for 15 days, but that's close enough to 18. Anyways, the important thing about this is that the RSI is not really useful when trying to time intermediate tops in crypto, as crypto likes to be overextended for a long period of time. Other technical indicators like the MACD do provide a signal when crypto dumps, as you can see here, but there's a considerable amount of delay and there's not a lot we can do to fix this, as the MACD is made up of moving averages, which are inherently laggy. We could shorten the days in the moving averages, but that would sacrifice accuracy and it would give more false signals. Once again, if you want to know more about this, I have a whole video on this topic, so click the I button on the top right corner of your screen. Anyways, if we were trading solely based on the MACD alone, we would have sold all our Bitcoin when 1/3 of the move has already been completed. This means we would still be down 10% from the recent high. Therefore, the crypto markets is too volatile and fast-paced for most technical indicators. This causes too many false signals or long overextensions. Basically, technical indicators in the crypto market are useless most of the time. That's why personally I try to avoid buying and selling during the bull cycle phase because there's no accurate tool available, or at least I haven't found one yet. I think the only way to trade crypto and squeeze a little more profit here and there was before price discovery. I guess early on before price discovery you could trade based on trend lines as shown here, but at most I'll just put a buy order at these trend lines in case it dips. I'll not put any sell orders because cryptocurrencies have a tendency to just break through resistance without ever retesting the broken resistance line. So you could potentially buy at a higher price if you're trying to get back in after you sold. However, as you can see, we are at new highs and trend lines start to turn less reliable as there's less historical data to back them up. The final point I want to make against trying to sell the top and buying the bottom is that I'm pretty sure, myself included, that none of us are skilled or fast enough to trade crypto. There are huge swings every day and they operate 24 hours, 7 days a week. Also, every time you sell, you pay short-term capital tax gains, which would mean you have to be an even better trader to overcome that difference. So what did I do during the correction? Well, like all good crypto believers, I dollar cost averaged and bought some coins. I decided to buy Litecoin because these coins were the only coins that didn't break its 2017 all-time high. I prematurely bought one coin on March 21st for $218.98. Like we all know, it decided to drop again and I bought again using my remaining money. I bought 0.19 Litecoin for $40.95 when Litecoin was at $209.16. Up until this point, I didn't know that we were dropping due to yields rising. I just thought that we were dropping because we went straight up for a few days and Litecoin just needed a few days to consolidate. Once I figured out yields were getting out of control, I decided to wait on the sidelines. While waiting on the sidelines, I did some technical analysis on the 10-year because unlike what everyone is saying, moves don't last forever and there is eventually a top or a bottom. As shown before, I drew this beautiful trend line and then I saw the yields were going to reach resistance very soon. This is when I decided to buy and I think I timed the bottom almost perfectly. I bought 4.14 Litecoin at $177.48 for $734.91 on February 27th. The low was made on February 28th, so I was off by a day, but I couldn't ask for more because missing it by one day is pretty awesome for my standards. In the end, my average cost basis for Litecoin is $156.78, which is pretty good. Now that I'm fully positioned in after that correction, where do I think Bitcoin is going to go? Currently, we see Bitcoin had a brief recovery and closed above this green trend line. It is currently retesting the trend line, and if this holds, it will resume upwards toward the blue trend line. If we reach the blue trend line, then I think we're good to go because you see a lot of touches here. Therefore, if this blue trend line becomes support, I think Bitcoin will continue its rise. With that remark, I'm going to end this video. If you like this video, press the like button. If you have any questions, leave a comment below. If you don't want to miss out any future content, press the subscribe button. Thanks for tuning in, and I'll see everyone on Sunday.